What is cost averaging? Cost averaging can be defined as you buying an asset that is perceived as being cheap at the moment. So you're systematically buying that asset. For example, let's say the price of an asset yesterday was 1 million naira, and today that asset is worth 500,000. But you know that this asset is very valuable, that tomorrow in the future it will be worth even more. Let's say 1.5 million, 3 million, 10 million, right? So the fact that that asset is worth 500,000 today makes it cheaper. Then you want to be a what buyer of that asset. So let's say, for example, you bought, let's say, 10 million naira worth of that asset right now at 500,000 naira price, and then that asset still drops. The price of that asset now drops down to 400,000 naira. You decide to buy another extra 10 million naira worth of that asset. You can see that you're actually buying that asset at a cheap price because you know that the perceived value of that asset later on in the future is currently selling at a cheap price. So now the most important question now a lot of people ask me is that, how do I know if this asset is trading at a cheap price, or okay, this asset is very expensive right now, let me wait for it to trade at a cheap price before I start buying? And with Bitcoin, I believe that I've actually been explaining it to you guys for a while now. Because if you look at the concept, you will understand that nothing just goes up on a straight line. Even your grind or whatever you're into, you agree with me that there are some periods of drawdown whereby sometimes things no go dey go well, sometimes it will start going well, sometimes it no go dey go well, sometimes it will start going, you understand? But if you look at the overall general process or whatever you've been doing, you will see that yes, if you look back and look at where you are currently, you will see that yes, you've been growing. Even though on a day-to-day basis, some days you're not really getting it right. Okay? Some days you're maybe broke or having a rough time. While some days, yes, everything is going well. Some days you understand. But overall, you can see the growth. Does that make sense? So this is the concept. And now looking at this Bitcoin's chart now, what do we have here? You can see that this is the price of BTC. And this was the last time BTC went to its highest high. You can see at this point, and I'm actually outlining. And if you trace it down to this point, you see that that was when Bitcoin was trading at around 125k. Now, if I bring this tool here now, we call it the price range tool, and then I map it down to where price currently is at the moment, which is here. You can see now, right? You can see that that is a significant minus 49% decline, which is now BTC trading at around 64k here. You can see it. Okay, so that is massive. That means BTC is trading at a 49%. It's actually 49% cheaper right now, almost nearly half the price. So if you've done your due diligence and you believe that BTC is going to be here for a very long time, then you agree with me that BTC trading at this point is a good time or an opportunity to buy. Okay, so if you're buying at this point now, does that mean that immediately price will start going up from here? Not necessarily, because we may still see some temporary price decline. Maybe BTC still wants to still drop a little bit more to this point, and if it's dropping to this point, that means that is BTC giving you more opportunity to buy it cheaper. Does that make sense? So if you understand that, if you're convinced of the value of this asset, then that means that every price decline is an opportunity for you to buy. So if you're buying at this point and BTC drops more and you decide to buy at this point, that is you cost averaging, maybe dollar cost average or naira cost average. You're cost averaging. Okay? So if you buy at this point, you buy at this point and price starts going higher from this point, then whatever you bought at this point is going to be in profit. And if price drops more to this point, whatever you bought at this point too will be in profit. Does that make sense? So these two will be in profit. So that's just how dollar cost averaging actually works. You're not looking at the asset that, oh, okay, I'm losing money because BTC is dropping, right? You're looking at it like, okay, I am actually getting an opportunity to buy it at a cheaper price. Though there are going to be some temporary drawdown, you're not going to look at it as I'm losing money. As long as you're not investing what you can afford to lose at the moment, you're feeding money or your money for your rent, you're putting it in for long-term investing, maybe 2 years and above. Does that make sense? So that's exactly how dollar cost averaging actually works. Okay. So don't forget to, if you have any questions, just leave it in the comment section and I'll see you in the next.